What's going on, everybody? Stocks by the Numbers, welcome back. And I wanted to do a quick overall look here into Dutch Brothers Incorporated, ticker symbol BROS, listed here on the New York Stock Exchange. The company recently, as you see, has gotten up above a couple of these resistance lines here and even broke out recently. This is the trend line here, August 9th, 23, connecting to the top, March 21st, 24, drawing across. And we can see the company reported earnings just about 2 weeks ago and came in with a very, very nice beat on the EPS side, posting 9 cents a share, estimates 1.4 cents. And on the revenue side as well, making a nice rebound. They missed this quarter this time last year, and they were able to completely turn it around. Recently opened about 150 new stores. This is essentially like it's like a coffee shop kind of, but they also recently started doing like the boba teas and whatnot. And apparently they're saying that Gen Z is, like they have nice repeat customers with Gen Z and whatnot. So apparently whatever they're doing is working well. And the company comes out and posts revenue of 275 million on estimates of about 255.5 million, beating by about 19.5 million or 7.65%. And technically now, in my opinion, the stock should kind of hold steady and potentially continue climbing, because even if we look at this resistance level here, in my eyes now, this is the key level to watch. And if we look here, even on today's chart, we can see that, where's the open here? So you can see, we opened up, we ticked up above 37. We came back down, dropped below that resistance trend line that it recently got up above, and then immediately reclaimed it and stayed above it and flattened out. So in my opinion, that is actually a pretty decent sign. Of course, the RSI has pretty much topped out. So this is why we can potentially drop below this line. And of course, we could gap fill back to like 33 or something. But overall, in my opinion, I do still like the company, and they are growing nicely. They're beating earnings more times than not. We have a market cap here of about 6.5 billion. PE, the company, the net margin is slightly starting to tick up here. So our PE is pretty overextended, of course. It's sitting here at about 200 times earnings. But as we see moving forward, we're potentially going to see increases on that on the EPS side. So that number should come more and more down to earth. But we can see 4 beats in a row on the EPS side. Look at this annual growth here. And we're talking about a company coming out of lockdowns and obviously pandemic as well. And you can see 327 million up to almost 500 million in 21, 739 million in 22, almost $1 billion in annual revenue for 2023, with the net margin now going back slightly positive here after being negative for 2021 and 22. So in my opinion, if they do have popular locations, if people do like their products and their services, and they consistently open, 100, 200 stores at a click, then chances are only a matter of time before this stock continues to grow. But as we see, it was much higher. Actually, it was basically this price when the company went public. But you can see we ran up here into the 80s. And then we obviously came back down to earth, got completely beaten up back to the 20s. And now we've been kind of just slowly stepping up here on these earnings beats. And if we go back here, we can see basically green across the board here for the most part. This was the last time the company missed on revenue, was back here, the August quarter here, the next quarter coming up. You can see they missed by about 3.5 million. And this was the quarter before. This was the year before, as you see, May 9th, 2023. The company beats on the EPS side, and then they missed on the revenue side by 11.7 million, missing by about 5.6%. And now we can see the company comes out, beats on the top and bottom line, and beats by over 19.5 million and beats by 7.6%. So it looks like, in my opinion, in the immediate short term, any wrongdoings that were taking place here about a year ago have been corrected. And of course, the new locations generating good revenue and good business, of course, that's just going to add to the situation. But about $1 billion in revenue, 6.5 billion market cap. So technically, I understand if you want to make the argument that it's kind of fair valued, and we may just kind of like slowly step down and consolidate before going into August earnings. And then hopefully, if those numbers are good as well, we can potentially pop back up and we can get back to that 40 level. So even if we come like here, see like this previous high right here on this candle, I know it's hard to see, but February 2023, even if you go up there, you can see you're sitting right around like 41.40, 41.5, right? And that's technically like 10+% from where we're currently trading. Stock recently got up to 38.41, off of that earnings beat. So that's why I'm saying we can potentially like consolidate, hang out around like this resistance trend line here. We could bounce around, maybe come down. If markets really sell off, we could drop about 10% from here down back into the 33s. But then if the company does step down, and then like I said, if they beat earnings again, then that could pop them back up into the 40s, and we can start seeing new highs and back to key levels that we were recently at. And obviously that would be good. But overall, they do seem pretty consistent. I have to say, it does seem to be consistently growing. You had the slight dip there in revenue, 264 million down to 254. Now it's back up to 275. So, Q4, yeah, end of the year, some people may want to try to not spend as much as they're able to, because holiday season and whatnot, you got to do shopping for friends and family. So to see like a slightly lower Q4, in my opinion, doesn't really seem like a red flag. But then to have a nice healthy bounce back in Q1, in my eyes, that's a green flag. But that's just me. We switch over here, we can see that the debt has increased, but again, they're, opening stores like crazy. So of course, they're taking on debt and they're spreading their money around, reinvesting into themselves. But we can see 700 million, 783, down to 645 million, 676, up to 861.36 million. So that's technically the most debt the company has had going back the last couple of quarters. But we can also see the free cash flow. See, it's down here at negative 16 and a quarter. This time last year was minus 40 and a quarter. So that's heading in the right direction. And of course, the cash has been holding steady and increasing very nicely, especially over the last couple of quarters, getting above that 100 million mark here, almost 150, 133.5 million. As of last quarter, 262.72 million cash on hand. So that's a pretty good sign. But of course, the debt was increasing. So that's why I'm saying if we do happen to like slowly step down and we come back down to like 34, 33 before we go into next earnings, in my opinion, it would make sense. Assets outweighing liabilities both in the short term and in the long term. We can see assets have almost doubled here over about the last 6 or 7 quarters, eclipsing 2 billion. Liabilities are up a chunk as well, though, up here at 1.38 billion. Assets minus liabilities yields total equity, and we can see the equity has jumped from the mid-high 200 million mark to the high 600 million mark in the last 3 quarters, and we can see we almost hit 700 million here for this last quarter. The debt increased, yep. And we can see the book value per share has actually slowly been stepping down the last couple of quarters, but about 100+% higher than where it came from. So, this is what happens with these companies who initially do these, who are in these growth phases, right? They're consistently spending money, even though they're making more than analysts expect. They're consistently reinvesting into themselves and spending money into these new locations. And that's why we'll have these ups and downs along the way. But overall, in my opinion, if we were to turn around a year and a half from now and we'd be looking at like a $50, $55, $60 stock, in my eyes, that would make perfect sense to me. But of course, right now, in my opinion, it's not necessarily like the little dips that they'll see in their, like their gross margin percentage, or a little dip like we saw in the book value. In my eyes, that's really not an issue. What they need to do here, in my opinion, is that they need to maintain this growth while staying in line or above analyst expectations on the revenue side. But most importantly, they can't start incurring losses wider than Wall Street expects. That, in my opinion, is the main go-to metric. So if all of a sudden they start missing on the EPS, they're less profitable than Wall Street expected, or if they're supposed to make 6 cents a share and they post a loss of like 1 cent a share, that situation, in my eyes, is what's really going to drive down the value of this stock. But overall, I have to say it does look good. Excuse me, we can see the PE was up here a touch above 1,000. Now we're sitting here at 200. So again, as the EPS goes up, the PE is going to get more in line. Again, the price to earnings ratio is the price of the stock divided by the EPS, which is the earnings per share. That's how you get the PE ratio. Price to sales sitting here a touch below 3. That's really not too crazy. And even before numbers really started taking off, they were trading about 2.5 times sales. So in my eyes, I don't view that as overextended, even though it's the highest it's been going back the last several quarters. Price to cash flow ratio basically cut in half. right? And we're seeing the slight incremental upticks in that cash flow, heading more and more towards flatness and potential positivity. So, 17 times cash flow, could be viewed as a decent number, but it was much higher about a year and a half ago. Price to book right now, 8 times book. It has been steadily climbing here for the last 4 quarters. We were up here trading double digits times book, though, right? So we can easily keep climbing. Enterprise value recently chunked up here to about 7.33 billion. That's about 800 million higher than the current market cap of the company. But I don't know if I would put too much weight into that, because obviously before that it was hanging out between 2 and 3 billion. But I know the company has recently, done some good things. Our return percentages are all up significantly, higher than where we came from. Gross margin back up here at 26%. We were holding that level a while back and even got up to 28, but that's what I mean. So you have a dip down to like 23, and a lot of people might view that as a negative. And then you have the company come back and boom, they're back up to 26 and they beat earnings no problem, right? You understand what I'm saying? So that's why I feel like a lot of these metrics, the ups and the downs, aren't really going to affect the company. I think right now everyone's watching to see, in my eyes anyway, to make sure that that debt doesn't really consistently climb and get out of control. And of course, on the flip side, the fact that all of this expansion doesn't start to eat into profits and bring them back to negativity. That's what I personally feel is going to be the biggest negative catalyst potentially for this company if they happen to run into that problem. But we can see the operating margin, same thing, right? Was climbing up nicely, almost 8%, 9.33%, back down to sub 1%, and then back up to 9.3%, right? And the stock didn't really move too much over that last quarter. And that's the point I'm trying to make. People are seeing this growth and they're looking down the line, and they're basically, in my eyes, kind of valuing this company based on like next year's numbers, not exactly this year's numbers, which is why we're trading currently about 6+ times annual revenue for 2023, and in my opinion, justified. But that's just me. EBITDA back up here to almost 15%. And you can see we were at 15, 17, dipped down to 8, and then we rebounded right back to double digits. So again, in my opinion, probably not going to be too much of an issue there. Net margin percentage, as we see, kind of bouncing around flatness, slight negatives, slight positives, 1.1, over 1.5, back down to minus 0.5%, and then boom, now we're back up above 2.5%. That's technically the highest it's been going back the last 7 or 8 quarters, so that's technically a good sign. Inventory turnover bounces up and down, as you see, almost 20, down to 15, then we climb 15.9, 16.6, 7, almost 17.2. So again, in my opinion, not necessarily a lot of red flags here. Asset turnover is down, though, from 0.83 to 0.63. But even with the debt climbing, you can see debt to assets has actually come down from where it was. Debt to equity has come down. The only thing that's basically in line is this long-term debt to total assets. But the long-term debt to total equity, as you see, essentially cut in half here from the high 3s, above 4, down here now sub 2, holding that level. So we'll see if the debt gets out of control and if the rate at which they're expanding and growing starts to plateau and slow down. But until that happens, I mean, it really seems like the up and up. The company, again, recently beat earnings. They raised their forecast moving forward. We can see on the EPS side, the company beat 6 of the last 8 quarters. On the revenue side, they beat 6 of the last 8 quarters. Moving forward now, they're looking to break into the 300 million milestone mark here, quarter over quarter, and supposedly looking to maintain it moving forward. And on the annual side, you can see we're looking for about 30% growth here for 24, up to 122. And then you're looking for about another 20% growth here, up to almost 1.5, and they're looking to maintain that growth year over year. So that's why I'm saying we turn around in like a year and a half, and all of a sudden the stock's at like 54, 57. In my opinion, I wouldn't be shocked, because they're growing very nicely, and if they can come in line or even above what Wall Street's expecting, then in my eyes, they will be rewarded. And here on the annual side, we can see we had a miss on EPS estimates for 22, and then boom, they came back and beat here in 23. 2024 looking to be slightly more profitable and looking to maintain that growth on the profitability side moving into 25, 26, and 27. But let's check some news recently. People talking about insiders selling. 10%. sold 439,000 shares. Oof, 16 million. That's a nice payday. Has control over a total of 1 million shares. Okay, I mean, technically it was a chunk. However, again, at the rate at which the company's growing, we know that these insiders sell shares for multiple different reasons. So, again, in my eyes, I wouldn't even view that as a red flag, believe it or not. Again, the stock, came down and was kind of flat for a while. Now we're in kind of recovery mode. So, if some of them want to liquidate a little bit and take some money off the table, it's entirely their own prerogative. Again, we've seen situations where we've had companies literally failing, consistently dropping, going out of business, and people would say, oh, but the CEO keeps buying shares, right? So that's why, in my opinion, I wouldn't look so much at the board and how many shares they own. Did someone recently buy? Did someone recently sell? I wouldn't view them as the real movers and shakers in my eyes behind a stock, right? We know, in my opinion anyway, we know that it's more about obviously the analysts are going to come out, upgrade, downgrade their ratings and their price targets. That affects the stock. But also, more importantly, it's the activists, right? And it's the funds themselves, right? People keep an eye on what Cathie Wood is doing, right? And if she buys Palantir, we know there's a lot of volume coming into Palantir, so something like that, you can jump on board, you can ride a wave. Or something like this, that's a more seemingly like a slower and steadier grower, where people are looking 2, 3, 4 years down the road at where this company may be valued. You could have someone like a Warren Buffett step in all of a sudden, take even like a slight 1.5% stake in the stock or something like that, just because he sees some solid fundamentals, right? We know those are going to be the buys and sells that are really going to advance or decline stock value. Not necessarily, the CEO sold some shares. In my opinion, I really don't view that as an issue. Wedbush recently raised their price target here from 39 to 45, maintaining outperform rating. After speaking with management, it is, quote, incrementally more confident that the current 2024 same-store sales growth and earnings before interest tax depreciation are, quote, conservative, and multiple medium to long-term growth drivers are now in place. Evidence is also, quote, starting to suggest last year's pressure on new unit volumes has been addressed, and new unit volumes could become drivers of top-line upside. Adding 20% EBITDA growth for the long term looks more realistic. I agree with that. Average outperform rating, price target range from 30 to 46. Maintained outperform, yes, we know this. Let's go back to our chart here. Yeah, see, again, talking about the share sells from owners here. DM Trust aggregator sold 27,000 shares, price of about 36. Total sale amounted to almost 1 million, leaving the entity with 2.1 million shares, right? They sold 27,000 shares. Now they still have 2.1 million shares. That's what I mean. In my opinion, something like that, not really an issue. If we look at what the CEO did, laying off whatever, 15, 16 million worth of stock, again, who knows? Could have been for tax purposes, or maybe he was just greedy and said, hey, you know what? Give me some cash. I've been working my ass off, growing this company like an animal, so I'm taking, 15 million. It's understandable, I guess, but obviously it's not what everyone wants to see. But again, in my opinion, I really wouldn't personally view that as a big red flag in my eyes. Individual aggregator disposed 27,000 shares, almost 1 million. Nice bike going by. Direct ownership stands at 1.281 million shares, right? Disposed of 27,000 shares, still has 1.28 million shares. That's what I mean. In my opinion, not an issue. Yeah, 4 million. And remember, if they, and a lot of people try to say, oh, they may be, thinking the stock's going to go down, so they're taking profits where they can. First of all, we know that stocks fluctuate and we go up and down. Even now that the stock is up, as you see, it went up and then it went down and then it went up and went down and now it's up again. So we know that we have these ebbs and flows, right? But at the end of the day, if if they are opening that many stores and they do have consistent increase in comp sales and they recently increased their guidance moving forward, it's like all of these are positives, right? So that's what I mean. That's why it seems like all of this is lining up to a future higher share price. So that's why, again, in my opinion, I wouldn't really view that as a negative, because I wouldn't think that the CEO and whoever else on the board would be viewing this as like, oh, the stock topped out, we have to sell our stock now and take profits now. You understand what I'm saying? Because they probably know that it's going to be worth significantly more in the future anyway. So again, that's why I personally wouldn't read too much into it. TD Cowen with the upgrade here. Upgraded the company to buy from hold. Now has a buy rating on it with a $46 price target. We're reading. TD Cowen. Dutch Bros maintained that equal weight by Barclays. Barclays, though, that's, the English. They're always a little bit more conservative, I feel like, when it comes to a lot of their price targets. But that's just me. That's just my opinion. Raised price target from 30 to 35. Wow, well played, being that the stock is at 36. So that's what I mean. It's go big or go home. You know what I'm saying? Like, do you see growth? Could you give this thing like a $45, $50 price target? Or are you just really trying to play it safe so that you don't look bad at all? And it's just like, oh yeah, equal weight and $36 price target. It's like, yeah, we didn't need you to tell me that, But whatever, at least they gave their rating, I guess. Stock climbs after blockbuster Q1 results, posted better than expected first quarter financial results, and raised its full year revenue guidance. Right? So that just happened 2 weeks ago. And people are worried that they're selling shares. They just said they're going to do better this year than expected. So that's why, again, I don't think it's, oh, we got to cut the shares, we got to run right now. That's not the way I would view it personally at all. 9 cents a share, estimates of 2 cents. Quarterly sales 275, estimates 254, representing a 39.5% increase over sales of 197 million same period last year. 10% same shop sales growth tied its record for new shop openings. Company operated shop revenues increased 43.3% to 248 million as compared to 173 million same period. Selected Olo, mobile app payments. Okay, very nice quote. We are pleased with our performance. We delivered exceptional results. Headlining Q1 to 10%. Yep. Strongest single quarter since Q4 of 21, 39% year-over-year growth in revenue to 275. This is what I mean. In my opinion, it's really on the up and up. It's really growing nicely. Revised full year 24 revenue outlook between 1.19 billion and 1.205 billion, raised to between 1.2 and 1.215 billion versus the 1.2 billion estimate. So if nothing changes now and they keep operating the way they are and the business doesn't change at all, they're going to beat this fiscal year 24 number. Company expects total system shop openings in 24 to remain in the range between 150 and 165. This was before they raised their price target again, I believe. Wedbush, but here, after the report, obviously, immediately raised the price target at 39 from 37. Let's see, any other news? Gen Z, yeah, this is what we were talking about. The boba, latest special offerings, big hit among younger customers. Company unveiled special boba drinks, multiple flavors in March, part of a broader strategy to keep its menu fresh. CEO says on a call with analysts, the offering resonated with Gen Z customers, tended to drive repeat visits, right, which is huge for the type of business that they're in. Notes that the company believes the boba offering led to more group buying behavior, right? Hey, let's all go over here and get a boba, right? That's how it works. We know that, right? Not necessarily peer pressure, but more along the lines of conformity, right? And if everyone's going over there, you're going to go over there too. And if you never had one, you're going to try one. Or if you had it before and you liked it, all right, screw it. Let's go over there. Let's get a boba. Boosted average ticket. That is basically how much the average person spends when they go in there, right? So now we have groups coming in together with conformity, and we have, of course, higher ticket sales, higher traffic. Higher traffic and increased average ticket both helped boost Dutch Bros same shop sales in Q1. Shares up 8% after hours. Dodges Starbucks' harsh sell-off. Yeah, I wouldn't connect this with Starbucks at all. That's another thing about the market. Excuse me. That's another thing about the market that really grinds my gears, right? We just looked at Target, and that's what I mean. It's also in the space as Walmart, and Walmart just had a good quarter. So, sometimes they'll move together or even inverse each other when technically that's not set in stone. And, just because Walmart beat doesn't mean Target's going to beat. And also, just because Walmart beat doesn't mean Target's going to miss just because they're a competitor. For all we know, foot traffic increased across the board at all of these retail stores, and they're both going to beat, right? So that's why to connect something like this to Starbucks, in my opinion, not even close. This company's on the up and up. Starbucks has basically polluted the world with all of their locations, and they charge everyone, $9 for a cup of coffee. So I really don't know if I would really put them in the same category, even though this quote unquote is a coffee shop. I don't know. But that's just me. Revenue rises, revenue guidance increased. Yep. Upbeat, numbers are good. And like I said, opening another 150, 160 location, that's nothing to sneeze at. Even if it's just here domestically in the States, which I believe it is. But even if you wanted to evenly distribute that, that's 3 locations per state, right? And we know they're not going to open that many. If they go to a place like, Montana, they're probably going to open like 1 location, right? But if they go to Texas, they're probably going to open like 5 locations, 6 locations. So that's why that's more locations than people would think. And of course, they compare it to Starbucks, and I bet you if Starbucks announced right now they're going to open another, 150, 200 locations, I bet you the stock would go up. Netted 7 million. And you can see this was back here, TD Cowen 33, and they recently did what? Up to 46, right? It was 33. Now the price target raised to 46. That's what I mean, because analysts know that the more locations there are, the more customers they're going to have. And if, people like the existing locations, then chances are word of mouth is going to spread, and they're going to appreciate the newer locations opening. And all those locations are probably going to do as well as the existing locations. And that's going to generate more revenue quarter over quarter and year over year than the company used to post. And off of more revenue, now the company is going to generate more income and have a higher net margin percentage off of previous quarters and previous years. And there you go. You're going to be on the up and up, in my opinion. Switching over here to the daily, we can see we had this big trumpeting taking place with the Bollinger Bands. And obviously they just beat earnings. RSI still sitting up here at 69. It's been holding this benchmark here for several days. Look at that big swing, though. RSI went from sub 30 up to, north of 70, almost 80 here. Just in a couple of weeks' time. Of course, that's what one good quarter could do. Right? Instantly trunked up to the 50-day, bounced off of it nicely, and then rose up. So in my opinion, it really shouldn't come back down to this 50-day in my eyes. But of course, we know anything can happen. MACD raging, climbing to the sun. Switch over weekly. We can see the RSI almost starting to tap out, sitting here at about 65. So that's what I mean. Top Bollinger Band on the weekly, 37.30. That's why we can slightly maybe stay flat or slightly tick up here for a couple of more days. But chances are it's probably going to start pulling back here towards the mid 30s. But look at that MACD, just for the most part here on the up and up throughout the years. It has its crosses down and then the crosses back up. And earnings, of course, back here were potentially a little more mixed than what we've been seeing recently. Again, EPS revenue beats, I believe, both 6 of the last 8 quarters the company has been beating. And you can see we were coming down, right? We were in this tightening, and now we're breaking up. But again, they beat earnings, so that obviously added to the whole move. Switch, check the pivot points. 31.92 in my opinion is way too low. And what do you know? What did I say? The previous high was what? 41.40, and look at the next resistance level on the weekly, 41.18. So in my opinion, that's probably the next stop if they beat again, roughly 3 months from now in August. And we can see top resistance level here on the weekly, 35.79, right? So we're about a full point over that. So that's why I was saying we can potentially, you know, fill that gap and come back down here to the mid 30s before maybe trying to take that next leg higher. What was this previous level? 36.61. You can see, look, that's basically right where the bottom of that candle was. Off a couple of cents. Before that, yeah, it was back here, 35.75, basically where it was. Okay, all right. But yeah, overall, in my opinion, again, you in my eyes, you want to follow the growers, you want to follow the revenue, you want to follow. I know the profits are slowly ticking up here with this company here. Again, net margin percentage hanging out, you know, 1.5. Now we're up to 2.5%, right? So it's not blockbuster profits like we see from something like an Nvidia, but on the flip side, it's the consistent growth, right? It's the consistent growth that this company is seeing. And of course, again, the fact that so many similar places like this have been struggling over the last couple of years, a lot of them even had to close their doors. And we have something like Dutch Brothers consistently growing their business, opening new locations, and just chunking up this revenue year over year. In my opinion, very impressive. So, you know, if you didn't know about this one, and let's just say you take a position here at 36, if it does pull back and, you know, fill this gap here at 33, in my eyes, I wouldn't view it as a big red flag. And again, if we like it at 36, you should love it at 33. And as long as this company keeps doing what it's doing and doesn't release some random massive negative catalyst coming out of left field, then in my opinion, this should technically be a long-term winner, in my opinion, over the long term, obviously. But that's pretty much it. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they are volatile, they are very uncertain. 1 minute we're up, next minute we're down 200 points. I understand. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys enjoy your day.